while everybody's run away, go another direction and find the opportunity there.
Buy your dream home. Refinance as soon as rates going to go down. I believe rates will go down.
People who work in US Bank or Wells Fargo in the corporate structure, that they do loans through us, because it's even for them, people who work in the bank, in the industry, cannot get a loan through their own bank.
Right now, I think it is a buyer's market versus last year was a seller's market.
Yeah, crazy
Agreed.
seller's market. I would say. Everybody, we got a really great person here, Tiffany, great account executive that's been working for many years. She'll help us a lot with different cases that we had. And today we also know she's a great baker, that she does a lot of baking, and she gave us goodies today. But Tiffany, tell a little bit about yourself. When did you start it? How long you been in business?
Sure. Actually, I started right out of high school, believe it or not. It was an accident that I got into the mortgage business. I finished high school and went to college, and my uncle, who owned a mortgage business, said, come on in and help us out, part-time. And back in the days, Alex, I don't know if you know, we used to copy these packages. You remember those days? Transbox,
Yeah.
right? So that's what I did. I basically came in after school, copy packages, send transcript, drop them off. And, once I got into it and learned the business, I just fell in love with the mortgage business. So I was very, very lucky that I got into it accidentally. And that's how I got into the mortgage industry. Learned it in 2 months and got myself a full-time job in Beverly Hills. And just from there on, I did hard money. I worked for banks. I did retail. I did wholesale. Basically, in the mortgage industry, I did everything. But wholesale is where my heart is, because I'm able to work with brokers like yourself, your team, who are very experienced, and help you guys get the loans through. And not only it makes your broker or your borrower happy, it makes me happy that I'm able to do that. So of all the things that I've done in the mortgage industry, wholesale is where my heart is.
That's great. And just to explain that a lot of people don't know our insights, how everything works, there's retail like Chase, Wells Fargo, where you go directly to the branch, and there's wholesale. There are banks that most of them do not work directly to the borrowers. They work through a mortgage broker like us, that you guys come to us and we'll help you with the bank, like Tiffany's bank. So yeah, it's just a lot of people don't know the actual structure, how everything works. Great. Tell me, I mean, a lot of times we have this question from people that we always have to explain on a bank standpoint, because people think that bank is giving me a hard time, right, to do something. Just to explain to people, banks, they want to lend you money, right? They make money on it. Why sometimes there may be an issue with the bank lending to somebody, because it's a underwriter that's stubborn, or there's an investor, there's government, who's involved?
So with the loans, we have investors who are putting a certain guideline in that our underwriter is supposed to underwrite on. And the whole point of underwriting is to make sure that the borrower qualified to purchase this home and able to pay the mortgage, right? So the reason sometimes the borrower get denied is because they're more of a risky borrower. Maybe they're buying too high, that they're not, able to afford it. So that's why there's a guideline that the investors and banks have. They're putting out their money, and they give us a guideline as to, if you have a borrower, they should fit this box, because if you fit this box, they should be able to repay the loan. So the whole point is to repay the loan. So the guideline comes from our investors. Us as a lender, we underwrite based on the investor, what they're looking for.
Yeah, and everybody's different, so people understand that. We had a lot of deals where we spoke with the bank and that said no, and then we came to Tiffany and she said okay, because it's not that you just said okay. There's guidelines and ways of talking. You can ask for exception from the investor. There's ways of getting around some things that might be okay, because not each client is, it's all individual. It's not everybody in the same.
Correct. And I think that like we can speak from experience, but we've done a few of loans for you where we've done exceptions, right? And the exception is based on there's a guideline, like you said, we should underwrite in the guideline. The exception is because you have borrowers who have good compensation factors. They have good FICO score. They have good asset. They've been around, for a long time. They show they can repay. So sometimes we can go off the guideline because this is a very strong borrower. And yes, you're right. It depends on certain investors. Certain investors want something to stay at 70%. Some investors said, okay, I'll do 75%. So the good thing about, your company coming to my company, for example, we don't use one investor. We have a few investors. So one say no, the other one will say yes. And that's where the exception comes in, is we find the investor who will say yes to the great borrower and the great compensations that you have for your borrower.
Yeah, that's great. Another question is that, again, there's big banks, like we said, retail, for example, they just offer, like we call it a paper, full doc loan, where you have to work for 2 years, you have to show taxes and all that. On the other hand, there's a lot of programs that people don't know about, like non-QMs, where self-employed with no taxes can qualify. And it's a huge amount of people who just till recently couldn't qualify at all. They couldn't buy, refinance, or anything like that. Now they can get into market using these new programs. Why big banks do not offer this? Why a person cannot get it from them? Is it governed by some?
Yes. So the A paper are usually Fannie Mae and Freddie Mac, and they tend to have more strict guideline than the non-QM, and that's why the non-QM came in place, is because non-QM is anything other than the conventional loan. So the conventional, you do a paper, it's in the box. The non-QM is for borrowers outside of the box, meaning all the self-employed borrowers who we know write everything off because they can, but that doesn't mean they don't qualify to buy a certain, property or, of certain value. So non-QM came in place because what we did is we allowed the self-employed borrower to qualify based on bank statements because of the deposits that they're doing, as well as a profit and loss program, which is a great program that I totally love. And then there's the investment program for investors where we do the DSCR, where a lot of the investors, they want to buy, 10, 20, 30, property, but we don't need tax return for them. There's a certain criteria, but these are great programs other than our A-paper program that is more full doc, banks, with W-2. You have to have 2 years 2 years employment. It's tougher. A-paper's tougher. Non-QM came on board to help other, I would say, borrowers who need additional, like, I would say, flexible documentation to qualify. We've done many loans with you with a profit and loss and bank statements, and they're 3.5 million, 4.7 million. We do large loan amount without any problem at all.
Yeah. No, because banks see that it's a qualified borrower. Just on paper, he did the right choice of not paying too much money to IRS, and he actually put this money in down payment or something like that. But do you know why? Why would not a big retail bank offer non-QM loan? They don't want to do it, or they cannot do it.
So, with that said, a paper is just your square box. Non-QM is outside of that box. So with that said, obviously non-QM loans are a little bit riskier.
Yeah.
And some banks don't want to really do a riskier loan. And that's where non-QM comes in.
Because my understanding, again, banks like Chase, mortgage is not their primary business, right? They do loans, but they do a lot of other loans, auto loans, credit cards, blah, blah, blah. So it's maybe for them, they just don't need that extra hustle.
They're more conservative. Banks are more conservative, right? I mean, at the beginning when I was telling you that I worked pretty much everywhere, I've worked at U.S. Bank and Bank of America, and I sat there and they're so tough that I would literally have borrowers who has all their money in their bank and they want to get a loan and they don't qualify because they write everything off, and I would still have to say no to them, and they don't understand. They're like, "But Tiffany, I have all my money in the bank here. Why wouldn't you qualify? I'm your clients for 50 years." But banks don't care. They don't care that you have all the money. They want that box, that box, and that's it. And so let's call it, the banks are more conservative. So this is one of the reasons why we have brokers, because brokers can shop for the borrower to go out of that little box. Because in our I guess state, in our country, there's so many self-employed borrowers, and a lot of these borrowers are just limited to what they're able to be qualified based on their tax return. So the non-QM coming on board, we're able to see larger purchases from self-employed people who do qualify. They just don't show it on their tax return. But banks are normally conservative.
Yeah, like you said, it's we have a lot of people who work in U.S. Bank or Wells Fargo in corporate structure that they do loans through us because it's even for them, people who work in the bank in the industry cannot get a loan through their own bank. It's crazy how the system works.
Other than that, I will tell you it takes at least 90 days. Because that's one of the reasons I left the bank business. Because if you brought in let's say you're coming into me and you're like the perfect borrower, right? I would bring it into you and I couldn't fund your loan in 60 days or 90 days. Why? Because it's just sitting there, because they don't have to move it. So that's why mortgage broker like yourself are very popular for people, because we can do it in 2 weeks, so a month, right? 30 days, where they're sitting 60 and 90 days.
It's just a huge machine that's just they do not care as much as we do because we don't get paid until we actually close the loan. Over there, people, it's just just a job that passing through. In your opinion, since you're more involved with the secondary market investors, what do you hear an opinion about mortgage industry in general? Like, where are we going? Is it going to be easier, harder? Is the rates going to be improved? The price value? How the banks are getting more conservative or not? Because I don't think anything change on your side in terms of how you guys land, pretty much.
So what I'm going to say is, obviously nobody has a crystal ball, right? Nobody really see what's really happening. As you see last year, I remember in January our rates was in the fours and non-QM, and at the end of the year was in the nines. Did somebody foreseen that? I promise you no, right? Nobody did. So if you're going to ask me what I think it's happening, I think that we were hearing that it's supposed to pick up either the first quarter, maybe the second quarter of this year. So I would tell you the first quarter is a no right now, as you notice with the news.
It's better than it was
Last year, yes, yes, yeah. At least the second, right? The second half of last year, absolutely right. I'm going to tell you that us, for the lender side, at least my company, what we're thinking is that it depends on what they're doing with the inflation, right? I think March 14 they're coming up right now with talking about the inflation. If they're going to say the inflation stays high, we're going to see the rates go up. If it's going to stay the same or going lower, we're going to see it going down. I think the Fed is meeting on the 21st of March, and I think we're going to see it going up. But you're right that I think this year is not going to be the way last year, where it was just up and up and up and up trending. I think it will be up and down, but more. I think we've I guess I could call it stabilized. I believe. It's going to be around here. Up and down a little bit. Yeah.
But we see a lot of, that market actually picking up, especially on purchases. People kind of got used to the new reality that they're not going to wait for 3% interest rates and nothing is falling, that everybody was saying that our TV, MSNBC, everything. But in reality, people understand, and people getting into that, especially today, they can get discounts on the house because a lot of people got out of the market. Now I can go in and actually ask for a discount, buy something I can. Rates always change, like you said. You can refinance. but people are getting more understanding, getting smarter about it to actually get into the while everybody's run away, go another direction and find the opportunity there.
No, you're absolutely right because I think that what happened, they've been spoiled with our rates when we were, in the COVID situation. It was been lowest and historical, right? It's the lowest, and then of course it creeped up a lot. But I remember starting really right out of high school, and A paper was 10 and a half.
That's what I wanted to ask you now. Yes, exactly.
It was 10 and a half, and
And
people
this was a
were
great rate.
and people were still buying, right? People were still buying. I agree with you that today, I mean, I would tell you this month I've been getting a lot of more phone calls and people are still buying. I still think buyers are still out there. If you remember mid last year, it just stopped because of rate going up. It wasn't because we didn't have any more buyers.
Yeah.
The buyers are still there, I believe.
Of course.
And I agree with you in a sense that I think that the buyer needs to think what's best for them. And to me, if I was a realtor today, I would tell my buyer, look, last year you would be able to buy something that you offer the fifth time or the sixth time. It's not your dream home. Today, you can find that first offer and you can get in that first offer. We can refinance later on. We've been around, you and I have been around.
Yeah.
Nobody, very few keeps their rate for 30 years.
Yeah.
Today, I would say to the buyer, today, buy your dream home. Refinance as soon as rates going to go down. I believe rates will go down. If it's not this year, it will eventually go down. You're not going to keep it for 30 years this rate.
Of course, of course. And I don't know we've been doing this for 20 years. I don't know anybody who actually stayed with 30 years just paying the same mortgage. I don't, at least don't remember anybody doing that. And don't forget that people who are kind of got out from they thinking about it, not buying, they still paying rent. They still have to live somewhere. People forget, they think that rent is free, but when I'm buying something, it's an expense. But in reality, you still, live. And rents are going up. They as soon as the rate going up, and me as a client thinking not gonna buy, my landlord will increase my rate. And I always say, I don't know what rate my landlord has. Maybe he has 9.5%, and I'm paying for that rate.
Correct. That's true. That's true. No, you're absolutely right. Because the people who are looking to buy should think about the two things that I was saying. One, to get into their first dream home. And second, they're renting anyway, and rents are so high. Why not buy something in right now, knowing you're going to be able to refinance lower rate? In the meantime, at least you have a write-off. Because renting, there's no write-off.
For sure. People forget that if, let's say, 2 months forward, rates will go down, huge amount of people will get into the market, and sellers will start increasing their prices.
Again.
To me, it's better to get a 8% interest rate and $50,000 cheaper price than vice versa.
And a chance of refinancing later on, but at least you're in your home you want.
I liked my rate. I liked my property that I found, and I got it at discount. Today, price is not falling, but you can negotiate.
You're absolutely right. You're absolutely right. And I will tell you, a lot of my loans today that I'm doing right now, I'm seeing seller's credit, which last year we saw zero, right? We see people negotiating with pricing because let's say, as we all know, the appraisals or the value of the home has gone down. There's no doubt about this, at least 10%. So appraisal sometimes comes in lower, and the seller are negotiating.
Willing to go. Yeah.
Where last year we've had some situation where they're overbidding and the appraisal's not coming in, and when they're trying to negotiate with the seller said no.
No, we see a lot of people, appraisal didn't come in, they have to bring their own money on top of it. So they overpaid $100,000 a year ago. Now same person can get same house a little bit cheaper. Why not take this advantage?
Agreed. This year, I do, at least right now, I think it is a buyer's market versus last year was a seller's market.
Yeah, crazy
Agreed.
Seller's market, I would say.
Oh, trust me. Just FYI, my daughter sold her house for $400,000 more than asking. And I don't.
Last year.
Last
Yeah.
year, yeah, last year she had her house appraised in January for 1.4. She listed and in April in March for 1.6, and basically she got like multiple offer for almost 2 million. It's and it's sold like this.
Yeah.
I hope it's not going to be like this year,
Yeah.
because I just think that I hope to have borrowers who can actually come in and buy property, according to the value instead of.
For sure. And this is not normal. I mean, it's great that she got that benefit. She used that time correctly, but in general, it's not normal to go prices go up 20, 30% a year. Uh, Real estate is a slow process, 5% a year, 7%, whatever it is, depends on location. It's slow but steady go. Yeah, you're gonna get a little bit dips, but still at the end you're gonna have, some value going up. But to me, I'm looking at real estate. If I have to live somewhere, even if prices will not go anywhere, let's say for 10 years they're gonna stay flat. I do not care because I'm paying. I need to live somewhere. I have a tax deduction. My debt's going down every month by paying it off. So to me, I'm not looking for. It's great that it's gonna go up, but it's not my main concern.
Right, right. No, no, I definitely agree with you. It's interesting. Last year was very interesting, and I think that being in the business for over 35 years, and anybody who's in the business for anything, anytime, would even tell you last year was historically in pricing in the home as well as rates.
But
It
it's
was.
never been. I don't think this is the first time ever that did happen. So in my career, this is the first time I saw this, and one time we saw 2008 crash. But again, people always remember about that, and they keep repeating. It's like I was recently doing a video about Robert Kiyosaki, Poor Dad Rich Dad book.
Yes, yes.
This guy, like, great. This book is like literally changed my life. It helped me start to invest, getting into real estate. But now for a couple of years he's saying, this year that's it. It's gonna drop. Everything's gonna crash. This crisis. I mean, he's selling bad. I mean, he scares people, right? With this.
Yeah.
I mean, it's a business. It's his business to do this, and it's not only him. But I'm saying a lot of people using the scare tactics of that's how they get selling books or seminars, whatever. But for a normal regular person who is not a real estate investor or anything like that, it's discouraging him to buy.
Correct.
It's in any business. I bought my first property in 2007, so right before the crash. It really doesn't matter to
Right,
me.
because you're still living in the house.
Even I have to rent for 10 years, so I still sold the property and made profit on it 10 years later. But again, it wasn't my main point. It's not a flip or I'm doing. I still have to live, occupy something.
Yes, yes, yes. No, no, you're absolutely right. I say, any kind of investment or even home you live in, you can't say you gain or you lost unless you sell.
Yeah, for sure.
Because, right? I mean, you can be in the house and you're like, oh my God, I have all these equity, but if it goes down, you don't have any more. So yeah, absolutely. I agree with you there in with the mortgage. Yeah. Do you want to talk about what the real estate would do? I mean, we're just guessing, right? Real estate going to do in the next 3 years.
Yeah,
I-
let's do it.
I mean, we're all guessing.
For sure, no, it's whatever. Listen, with your experience and a little bit of my experience, it's a lot of good information
Information.
to the people because really they getting info from some guy on Instagram, young guy who says something. And it's,
Correct, correct. Yeah, so I mean, for me, I do feel like the market, like I said, it's already gone down 10%, the real estate market, but me going out in the field, talking to loan officers, they're still telling me there's multiple offer out there.
For sure.
So, I don't suggest borrowers saying, oh, let's wait for it to go down. I suggest them to go and find their home right now because it's definitely a buyer's market where, will it trend down? It may trend down. But as you and I just spoke about, where if you're not selling the property, you're living in the property, you shouldn't care if it goes up or down because real estate eventually everyone know historically will go up. It has to. I mean, we live in in America. Everybody wants to live in America, in California. It will go up. you
For
know,
sure.
you bought your property in '07 at the highest, right? It crashed in '08, 9, 10, but in 10 years later, you got
For
that
sure.
back and more. So for me, I suggest anybody who's looking for a home should continue to look for a home. Get the best rate that you can afford. Actually, I wanted to talk about also the program. If you're worried about a 30-year fix where the payments are so high, there's the interest only program that we can get people in to wait until the rates are going up. So interest only program, a lot of people goes, no, I don't want to pay interest only. They don't understand that getting an interest only program, you can still pay the principal on top of the interest.
If you
So
like.
yeah, and this is what I tell people all the time. They're like, I don't want interest. I'm like, look, Mr. Borrower, I'm like, do you understand that interest only is the minimum? If you have extra money this month or some month, you can pay extra. If you don't have extra money, you don't have to, but at least you're comfortable with a lower payment. So a lot of people don't understand what interest only is because they're like, oh my God, interest only, interest only. No, interest only, you can still pay principal.
Yeah, it just give you an opportunity to pay less if you like.
To
But
pay less if you're like borderline payment, if you worry about your high payment or something like that.
well, and some people we have self-employed borrowers who they're looking for interest only payment because listen, he said, I need to invest in my business. I have some business opportunities. I need money there right now.
Correct.
I do not care about my home. I still want to buy a home for my family, but I like to have the minimum payment I can do because my business will make me more money by investing in that. So,
Correct.
and again, like you said, you have extra $1,000 you want to put in.
Put
do
it in, right? It goes straight towards the principal, so then you don't have to really worry that okay, is my loan going to go down or not. So a lot of time that's where you as a mortgage broker, educate your borrower because a
Yeah,
lot of
that's
time.
kind of our main job right now is the education. It's like we right now say we in the education business, but we happen to do loans. So we
No, I think it's really good because I remember working at the bank, as a loan officer. As you see, I'm not your typical one where I actually educate my borrower and I explain to them why this, and that, and I find that there's a lot of trust. Right in
course.
that, so that's your relationship. My relationship as a lender with you as a mortgage broker is different. Where your relationship with your borrower is different. They really rely on you to get that loan that they really need to get into the home that they really want.
for sure, for sure.
Yeah.
But it's all like it's all teamwork, and it really is. We're building trust with our client, and we explain everything. We also have a relationship between you and me as a lender and the broker that you help us a lot with some deals that really hard or some five banks said no, and you go fight with investors or whoever. It's all also relationship. All of this real estate thing, it's about people and relationships.
Correct.
It's
Absolutely.
agents, escrow officers, title insurance, everything, lenders, all in work in the same team, and everybody works perfectly. It all goes well.
I agree, and we're in the best business in the world.
I agree. It's stressful, but it's good.
It's stressful. You're right.
Do you see banks are, gonna tightening them in terms of programs? They're gonna be making them more harder, or they're gonna create more easier programs as we go forward?
Okay, so I think it's all depend on how the loans perform, right? So once the loan is funded, it goes into, the investors and how our consumer are paying. So if they continue to pay normally, I think they'll be very lenient. I'll give you an example for the DSCR loan, for example, where that loan is no income, don't need anything whatsoever. Last year we did a ton of those. Towards the end of the year with the Airbnb situation, some didn't perform and they tighten up. They definitely tighten it up. I think that it just depends on our economy. I think it depends on how the borrower will pay. If our consumer either stop paying or have an issue paying, I think it will tighten up. But if it continues like this, then no, I think I love for them to roll out more programs, more flexible programs. But I think right now we have really good programs.
Oh, they are. I'm saying it's if they're not gonna be tightening them more, like in terms of removing some of the programs, but we don't see that for now. It's
No, I don't see any removing. I know the DSCR was a little shaky a little bit, but After that, I don't think so. I think it'll be okay. I don't see anything that they're tightening up so far. I think it's just rates right now that we just depending on the Fed.
Yeah. No, true. But especially for the business, like DSCR loans, investors, they have to put like minimum 20% down payment. So worst case, if Airbnb doesn't work, they can sell it or whatever. They can get rid of the property. But from our point, we didn't see any issues. Yeah, there's some Airbnb not performing as they thought, but still you can most with current rents, even if you're gonna do long-term rental, it's gonna at least cover your payment and you're gonna be okay until better times.
Well, I just saw last week that they said Airbnb is back again.
Yeah.
So I think that's going to help more of our DSCR. I think we'll see if Airbnb are back again. I think our DSCR will go back more flexible, right? Because usually what they want is they want the payment, the rent to cover the payment. But sometimes we're worried about that because if you're not able to rent it out, then you can't cover your payment. But Airbnb, you tend to make more money than the long term. But you're absolutely right. It doesn't hurt to buy investment home if you're keeping it long term. You're renting it, so let the renter pay the mortgage, and eventually, down the line, you have the equity there. And two, worst case, if you don't want anymore, you can sell it and get your money back.
True. Tiffany, thank you very much.
You're
It's
welcome.
been a pleasure.
Thank you for
it's
having
really a lot
me.
of useful information that I got to myself and hopefully people also get. So we'll be working
Yes.
for you, our friends, to bring you more good news and good programs, good information.
Thank you very much for having me. Thank you.
Thank you.